certainly. They have totally shifted their business to a more subscription-based model that is absolutely, positively working by looking at these ARRs, this recurring revenue metric, really. And that's very, very healthy. The stock really has been very sloppy year to date because it was one of the best performers last year. So, but this is a good story, and it looks like they're raising guidance from some of the language we're getting in the press release, but we just don't know how much. So let's hear what they have to say, but I like it.
Yeah, I mean, this was a 2015 style stock.
Yeah.
This is a kind of a glamour growth stock. It was only down 6 or 7% year to date, but it seems to me you're at a point of saying, how much do we pay for this great business? Right now, it's 30 times this fiscal year earnings, but then you look at it growing 30% a year, and at the end of fiscal 2017, it's at 23 times. You know, so that's the kind of the math on growth stocks, and as long as the numbers keep coming through, the stock can work.
You know, and I'm glad you made the point, Steve, going back to what we were saying a moment ago, is there's a lot of the dividend payers, a lot of the kind of, you know, value-ish traditionally names in the market that are actually getting pretty expensive precisely because people are willing to kind of pay up for them now. So does that make them less safe?
Well, that's always the case. You always have that capital risk. But I bought Altria Group personally today, and I did have to battle with a little bit of, is it too lofty of a price? But if you look at Philip Morris and you look at the XLUs, the ETF for utilities, those two, Philip Morris and XLU, are overbought on an RSI, Relative Strength Index. Altria Group is not. So even though it's run pretty aggressively, you still have a 3.8% yield. Yeah. So that's why I bought it personally. But getting back to Adobe, these are pretty lofty levels. I'd be very careful buying it off of this print.
And the stock is up another 4.5% after hours on those results. All right, guys, thank you so much. Steve, thanks for joining us. And be sure to stick around to catch more of Steve Grasso. Fast Money at 5. The man who called the rally in gold, JP Morgan's global head of derivatives, will tell him where he thinks gold is heading next. You won't want to miss it. Up next, we'll hear from somebody who says Washington is at war with short-term traders, and a smart way to fix our economy is to make it easier for investors to bet against stocks. He'll make his case next. Plus, my walk through the streets of San Francisco with Twitter and Square CEO Jack Dorsey. Find out if he has any regrets taking those companies public, considering their rough post-IPO rides. Later on the closing bell, you're watching CNBC, first in business worldwide.
An AT&T small business expert.
Sure am.
My staff could use your help staying in touch with customers.
AT&T can help you stay connected.
Am I seeing double?
No, ma'am. Our AT&T buy one, get one free makes it easier for your staff to send appointment reminders to your customers.
And share promotions on social media?
You know it.
Oh, now I'm seeing dollar signs.
You should probably get your eyes checked.
Good one, babe. Optometry humor.
Right now, get up to $650 in credits to help you switch to AT&T.
Know your financial plan won't keep you up at night. Know you have insights from professional investment strategists to help set your mind at ease. Know that planning for retirement can be the least of your worries. With the guidance of a PNC Investments financial advisor, know you can get help staying on track for the future you've always wanted.
Being fast means we're getting the information out there to you as soon as humanly possible. As soon as we know that it's accurate, it has to be right.
Markets absolutely move based on what happens on CNBC every day. That's powerful, and that's also sobering. So that's why we work so hard to get it right. This is about your money, your future. CNBC brings these business issues home like nobody else.
One of the things I like to do is to lean against hysteria. There's a lot of misinformation out there, but if you spend the time, you can get the numbers right, get the math right, get the decision.
Did you know Walker's Marine is the largest pursuit dealer in the world? That means whatever your style, we have the right pursuits in stock now. Inshore center consoles, perfect for fishing shallow water. Bow riders designed for having fun in comfort and style. And the Offshore Series, quality fishing boats built for a comfortable ride at sea. And all our pursuits are powered by Yamaha. Pursuit, durable, reliable performance that rides like a yacht. Walker's Marine, locations in Marco Island, Goodland, and Fort Myers.
Hi, I'm Dylan Radican. The world is brimming with possibilities. And that keeps me busy. My latest invention may be able to feed and sustain communities around the world. My team and I are always on the go, meeting new people and seeing new places. I produce films that I really care about. It's an honor to speak to audiences around the world. When people come together, meaningful work gets done. How do I do all this? Well, that part's easy. Hotelplanner.com.
Market master Jeremy Siegel looks beyond the dovish Fed move, how it will impact the global economy, and what's ahead for investors. Squawk Box tomorrow on CNBC.
Welcome back. Let's get back to John Fort with more on Adobe's earnings as those shares are now at more than 6%, John.
Yeah, Kelly, got the guidance going through the earnings presentation posted on the site. The stock appears to be responding well to that. I'll tell you why. A couple reasons. First, in Q2, the range that Adobe is giving of revenue between 1.365 billion to 1.415 billion is right in line. The midpoint is right in line with analyst expectations. That would be $1.39 billion in revenue at the midpoint. EPS is actually higher. The street was looking for 65 cents. Adobe is guiding to 64 to 70 cents, which puts the midpoint above what analysts had expected. For the full year, Adobe has also raised its guidance for the full year 2016. Adobe said to expect revenues of $5.8 billion. The street was looking for 5.74, and on EPS for the full year, $2.80 versus $2.76 that the street was expecting. Now, given the cautious outlook that the entire industry had at the start of this year, given currency and all that, this is heartening. I would note, though, a lot of Adobe's business is in North America and in more developed markets. And with this cloud business, it might be a little less exposed than some of its peers to currency fluctuations. Kelly, back to you.
The chase is on for those shares, up about 7.5%, John. Thank you. Now, is Washington at war with short-term trading and short selling? Our next guest thinks so. He says the government's push for long-term investment profits is actually bad for the economy, and the government should make it easier to bet against companies. Let's bring in J.W. Very now, a senior scholar at the Mercatus Center, along with CNBC contributor and Shark Tank regular Kevin O'Leary. Welcome to you both. And J.W., just begin with you. First of all, do you think appropriate levels? Do we have a healthy market? And you're saying that the risk here, though, is that the sort of the shorts and a lot of the high frequency guys get pushed out of the market, and that's bad for everybody?
Well, I think what we're seeing right now is a lot of increasing rhetoric from Washington that's very suspicious of some of the strategies that private funds engaging in activism have pushed forward. So we've seen, for example, yesterday or this week, rhetoric from Democratic senators at an SEC confirmation hearing where they were very skeptical of stock buybacks, giving back money to shareholders, which is not something they've usually been skeptical of. We see it on the campaign trail. Hillary Clinton has been very suspicious of activist hedge funds. And we saw it back in 2008 when a Republican SEC chairman stopped short selling for a short period of time during the panic. So I think we've seen that rhetoric increase recently, and I've found it kind of surprising and counterproductive, frankly.
Kevin, yeah. I was just going to ask Kevin if you agree, both about the direction this is all going and also about the negative consequences it will have.
I do. I take a baseline approach and I say to myself, what is it about a politician, agnostic of party, that makes them good portfolio managers? And the answer is nothing. This is political rhetoric. Anything that reduces liquidity in the market, for example, extending the time frame by which long-term capital gains are awarded, is a stupid idea because all you're going to do is reduce liquidity. People are going to take less risk and go to less risky companies. It'll probably retard small cap growth and jobs in America. Because that idea is really dumb. This whole idea of focusing on high-frequency trading is irrelevant because it's not proven to either help or reduce liquidity, frankly. So I think it's going nowhere. But lastly, stock buybacks and dividends are, for many people, the same thing. How dumb is it to make stock buybacks illegal, if that's the proposal, and not do dividends? That's dumb. That just shows you they don't know what they're talking about. Let's call it the truth, Kelly.
Fair enough, but let me, and Mike and Stephanie, bring you in here. One of the people who has been leading this kind of idea about long-term capital is Larry Fink of BlackRock. So if Washington wanted their guy, so to speak, to say, well, hey, he thinks so, it must be a good idea, Mike.
Yes. Now, Larry Fink is a $4 trillion asset management firm. A lot of it is in index funds. He has to be long stocks for a very long period of time. But I also think there's a point to be made that he believes it's counterproductive corporate behavior that might have the wrong incentives behind it. So I think one of the options is companies have a tax advantage. They feel like returning cash to shareholders is better done through share buybacks for tax reasons than through dividends, which end up being, taxed directly to all shareholders. You can have an argument about that, but honestly, I think most of these efforts right now are on the level of bully pulpit. We're saying this is how you should drop your incentives for your company, not necessarily let's outlaw certain types of activity.
All I know, Stephanie, I don't like anything that makes us, it sounds like it could come out of China, where it seems like when the markets don't go up, they just want to shut them down completely.
Yeah, I mean, high-frequency trading has certainly led to more volatility. I mean, just look at the way some of these companies respond to earnings, right, or bad news, or just announcements that are surprising. I mean, the level of extreme that happens on a daily basis to stocks, I certainly think is because of partly because of high-frequency trading, partly because the way hedge funds are positioned and positioning. So I think that there's definitely an issue here. But in terms of this really getting any legs, I just don't see it. And by the way, I mean, buybacks, dividends, those are really good things in the long run, and they're very good for shareholders, and that's what I think is the most important thing.
JW, what about the point, though, that Stephanie made a moment ago about some of the outsized moves that we're seeing in single securities? Now, interestingly enough, that might be the result of already some of this regulation coming to bear on markets, or it could be a sign that there is a problem that needs to be fixed.
Well, I agree. I think I recall an earlier point about some regulatory impacts on the healthcare sector, and I absolutely agree with that. But to this issue, I think it is a very real threat. I think it's more than just rhetoric. The Dodd-Frank Act gives the SEC an option to make it harder for activist hedge funds to buy up positions they can use to agitate for change. And though there have been some prominent examples of failures by activist hedge funds to really generate value, for the most part they do, and they generate about 16% above the S&P over the last 5 years. So I would look to that possibly being implemented by the SEC as a result of this rhetoric from Democrats.
Kevin, before we go, do you think activists are good for America?
I love activists. I really do. They weed out rot and patina and scrape companies clean. And that's a good thing. And by the way, while we're talking about dividends and repatriation of shares, we got to fix our corporate tax code. That's the big problem. That's what the next administration has to focus on. Last one was healthcare. Now America has to fix our corporate tax rate. It's really screwed up.
Yeah, well, it's going to take a big effort to fix it, though. Kevin O'Leary, J.W. Barrett, guys, thank you both.
Thank you.
Thanks for joining us. Still to come, critics have slammed Twitter and Square CEO Jack Dorsey for using stock as comp, claiming it hurts the business. He defends that practice coming up. But first, the son of Playboy founder Hugh Hefner. He's here and he's going to explain why he is on the anti-Trump bandwagon. Stay tuned.
Every day you read headlines about businesses being hacked and intellectual property being stolen. That is cybercrime, and it affects each and every one of us. Microsoft created the Digital Crimes Unit to fight cybercrime. We use the Microsoft Cloud to visualize information so we can track down the criminals.
When it comes to the cloud, trust and security are paramount.
We're building what we learned back into the cloud to make people and organizations safer.
If you're up $600 with your stocks today, why can't you just lend me $5? It's not real money. Interactive Brokers lets you use their platform and practice with a paper trading account. But otherwise, everything looks real. Just open an account and try it yourself. What's the point if it isn't real, dummy?
With all that practice, in 10 years, we'll have lots of money. Do you want to walk me home, Skippy? You could show me how to do that simulated trading.
You both have a perfect driving record.
Perfect.
Tickets, no accidents?
It is until one of you clips a food truck, ruining your perfect record.
Yeah.
Now, you would think your insurance company would cut you some slack, right?
No, your insurance rates go through the roof. Your perfect record doesn't get you anything.
Anything.
Perfect.
For drivers with accident forgiveness, Liberty Mutual won't raise your rates due to your first accident. And if you do have an accident, our claim centers are available to assist you 24/7. For a free quote, call Liberty Mutual at 1-888-862-3144. Switch to Liberty Mutual and you could save up to $509. Call today at 1-888-862-3144. See car insurance in a whole new light. Liberty Mutual Insurance.
Here at the TD Ameritrade Trader Group, they work all the time. What's up, JJ? Working hard?
Working 24/7 on Mobile Trader, rated #1 trading app in the App Store. It lets you trade stocks, options, futures, even advanced orders. And it offers more charts than a lot of the other competitors do in desktop.
You work so late. I guess you don't get to see your family very much.
I see them all the time. Did you finish your derivative pricing model, honey?
TD Ameritrade.
Welcome back. Cooper Hefner is son of Playboy's Hugh Hefner, and he's sounding off on family friend Donald Trump, warning millennials about voting for the Republican presidential candidate, saying Trump could take the country, quote, backwards. Cooper is the chief creative officer of Hop Media. He joins us now at Post 9. Have you heard from the Trumps?
I've not.
Why did you feel so strongly about this, though, as to make it a public statement?
Well, I always said that if I didn't have the opportunity to pursue a career in Playboy or in some branding effort, that I would have wanted to pursue a career in government. So this was a topic that was of interest to me before Trump was involved in politics.
So I'm presuming you wouldn't want to pursue it the way that he has.
Absolutely not.
What do you think is wrong and dangerous about Donald Trump's campaign for president?
Well, I think that, for one, he has absolutely no understanding or respect for the office. He sort of is rewriting the playbook for how every other individual has gone about running their campaign. But most importantly, I think most of his policies are backed and supported by racist notions. So,
Do you consider yourself Republican?
No, I don't. I consider myself a Democrat.
I'm wondering, just in general, you direct this at millennials. The conventional wisdom seems to be that the core of Trump's popularity is in older people.
Who have sort of skipped out on the opportunity to vote, to step forward and participate a little bit more and maybe educate themselves and start actually having a real dialogue and conversation about politics that really doesn't exist with most people my age.
How close a family friend is Donald Trump?
Well, I said this when I did a piece on NBC, and that was asked of me as well, and I said, you know, the mansion facilitated a lot of different people coming through. And I had the opportunity to obviously meet a number of different businessmen and women and actors and actresses and entrepreneurs. And you don't really, my relationship with him was based on, it was a childhood relationship. I spent a very small amount of time with him as an adult. So I had no opinion of Trump until he threw his hat into the presidential race, and then obviously listened like the rest of the country to a lot of the things that he was talking about, and sort of felt a duty to say, hey, look, there are young people. I know that there are other people obviously voicing that opinion, but there are other young people who truly do not support.
But do you, so you've known the guy for a while then. There are a lot of people who will say, you know, a lot of this is just kind of dog whistling.
Yeah, I don't know I don't know how familiar you are with the editorial I wrote, but I spoke on behalf of the fact that that it is incredibly dangerous when you have somebody running for politics who isn't really concerned with how he or she is remembered, rather that they are concerned with the fact that they are remembered. That should be alarming to everyone, because you want somebody going in who is concerned with what their legacy is.
But isn't that what President Obama, I mean, he also, I mean, there's so many different planks of what he's been doing that are quite clearly just about kind of being remembered.
Obama?
Yeah, whether it's normalizing relations with Cuba, signing the Iran deal.
Yes, of course, but I mean, depending on your politics, you're going to view those decisions as positive. I mean, if you talk to most millennials who are liberals, you know, the fact that the embargo with Cuba exists is absolutely irrelevant when one of our largest trade partners is, China. So it really doesn't make any sense.
Cooper, fair enough. Thanks for joining us.
Thank you.
Appreciate you sharing your views. Cooper Hefner is Hop Media Chief Creative Officer, joining us here at Post 9. Time now for a CNBC News update. Let's get over to Sue Herrera. Sue?
Hi, Kelly. Here's what's happening this hour. Speaking of Cuba, the U.S. Postal Service will resume mail service to Cuba for the first time in 50 years. The types of mail allowed will include letters and postcards. A full list is available on the post office's website. The announcement comes as the president prepares to travel to Cuba this weekend. Oklahoma correctional officers caught an interesting intruder. Guards say that they were on patrol when they saw flashing lights approaching the prison. Those lights turned out to be a drone carrying 3 cell phones. It's the second drone flown into an Oklahoma prison within the last 6 months. New radar scans of King Tut's burial chamber have revealed 2 hidden rooms, which researchers think might contain the remains of the legendary Queen Nefertiti. Her mummy has never been found. And just in time for Easter, take a look at that. The donut.
Oh, good. Sue, thank you so much.
Sure,
we'll
see you tomorrow.
The mobile payments industry is getting increasingly competitive. Up next, find out how Square CEO Jack Dorsey plans to stay ahead of the competition and whether he has any regrets about taking either Square or Twitter public. Plus, bank CEO pay is skyrocketing again. But is the performance of bank stocks keeping pace? We'll break down all the numbers for you later on the Closing Bell.
What if it were your job to make the world a more beautiful, colorful place? At PPG, we think that's something we all need to do. We create, invent, and formulate amazing paints, coatings, and materials so we can make the world run faster, stronger, fresher, smarter, cooler, lighter, greener, and better for the next generation that comes along. PPG, we protect and beautify the world.
I am Benedict Arnold, the infamous traitor, and I know a thing or two about trading. So I trade with E-Trade, where true traders trade on a trademark trade platform that has all the computer, trader! I won't.
Mobility is very important to me. That's why I use E-Trade Mobile. It's on all my mobile devices, so it suits my mobile lifestyle. And it keeps my investments fully mobile, even when I'm on the move.
In New York State, we believe tomorrow starts today. All across the state, the economy is growing. With creative new business incentives, the lowest taxes in decades, and new infrastructure for a new generation. Attracting the talent and companies of tomorrow. Like in Rochester, with world-class photonics. And in Buffalo, where medicine meets the future. Let us help grow your companies tomorrow, today, at business.ny.gov.
You can't always win the title, but you can never, ever lose the derby. The Manchester Derby, Sunday on NBC. Weekend coverage begins Saturday on NBC.
There's strength in our numbers. Tom Moran and Bob Edwards are Barron's top 2 advisors in Southwest Florida, 6 years in a row. Barron's rankings are based on data provided by thousands of advisors. Factors included in the rankings were assets under management, revenue produced for the firm, regulatory record, quality of practice, and philanthropic work. Investment performance isn't an explicit component. Moran Edwards manages over $2 billion in client assets, building long-term relationships with individualized professional attention that earns your trust. Call Moran Edwards today at 239-254-2200 for a complimentary consultation. See how our strengths can work for you. Wells Fargo Advisors, LLC, member SIPC, is a registered broker-dealer and a separate non-bank affiliate of Wells Fargo & Company. Investment and insurance products not FDIC insured. No bank guarantee may lose value.
Welcome back. Take a look at shares of Square. The stock down more than 8% so far this year, up about 33% since its IPO back in November, though. We've talked quite a bit about the stock move for this company, which was started by Twitter co-founder Jack Dorsey. But I was interested in learning more about the Square business itself. I met with Dorsey while out in San Francisco earlier this week to learn more, and we started by going to some of the sellers that use Square. Why is it so important to you to be a Square guy?
You know, customer experience is pretty important to us, and if we can leverage technology to give people a better experience, it's pretty great.
I often see Square at coffee shops, places where you want to get in and out, maybe high volume. But for you, why is it still so important for you?
Well, I don't know if it's about speed so much as security for us is nice. And I think people, if they see us dipping their card like they do at other retailers, I think it sort of puts us in that league with retailers who are sort of on top of things.
I'm ready, sir. Yeah, thank you.
Then you owe me $8.70.
That's a lot for soap, but it smells very good. Usually it's this one, but there we go. Cool. Does Square take a cut of everything?
We charge 2.75%, and then we pay the networks and everything outside of that.
Okay.
So that means the seller never has to think about anything but 2.75%.
Actually, that's what your compensation is, isn't it? Is it $2.75
I get paid
or something?
$2.75 a year. Yeah.
Very symbolic. With companies like his, do you reach out and sign him up, or does he come to you and say, hey, we want to use this technology?
The majority of our growth is organic and people coming to us.
Yeah.
So we benefit a lot from the word of mouth. This is ritual.
Pretend he's not here. What do you really think of the company?
Square has definitely made, again, figuring out which coffee is the most popular. For example, we brought in a really small lot It was great seeing how popular her coffee was because we had to charge a little bit more for that one, but now we can go back to her next year and say, hey, we would love to give you this premium price and bring in that special coffee again because we know that people are going to love it.
So it's inventory management for you guys as much as anything. You know,
Yeah.
It's not just about payments, it's also giving you a real-time sense of what products are selling best and all of that.
Absolutely.
You're talking about just this year posting a profit. How do you change the economics of that so that over time you get more of the revenue growth without so much of the earnings or so much of the costs that go along with it?
Well, starting any company comes with cost, and you invest in growth, and you're betting that you can build a really healthy and self-sustaining business out of it. And
You guys have a ton of different lines, right? So
not a ton, a manageable amount.
it seems like a lot. I mean, you got a lot going on here, which is interesting. And I wonder, as it all shakes out, what's your ideal mix of, kind of payments and Square Capital and some of these initiatives like Caviar? How do you think that's all going to look?
For us, it's really simple. It's how do you make the sale? So that's payments, and then how do you make more sales? So there's really two big buckets. It's a pretty tight collection of services that most importantly work together. We don't have any competitors who we've seen that build a cohesive experience for a seller.
Do you still feel like you're in the heavy investment phase of this company, or do you feel like you've done all the big investments and now you're just kind of hoping and entering the more profits heavy phase?
We're, I always want to be in a growth phase. I always want to grow our network. And we'll continue to invest as we can continue to build that network out. We started in the US, we went to Canada, we went to Japan. We just announced Australia. So we have the whole rest of the world too. So we'll continue to invest. But even in the United States, there's 20 million small businesses that don't accept credit cards. So
And that's where Square Capital comes in. And what I love about that that's interesting is that what you guys basically do is let a business owner open an email from you, say, sure, I'll take that $500 or $5,000, and then in order to pay you back, you take a little cut out of every transaction, right, until I've paid you back?
make it easy for the sellers so they don't have to think about it. They can just focus on their business and on their customer.
And what's the take-up been so far?
It's been really strong. Square Capital is one of our fastest growing products, and we're really excited about it because it offers a really simple, easy financial product to a seller. They don't have to go and visit a bank branch. They just tap a button and the money is in their account the next business morning.
Do you think you're putting the traditional banking world on notice here? I mean,
no.
Because what you're talking about is direct to business loans, basically.
Yeah, but we have a bank behind it. So what we've done for 7 years is we've made sure that we have the banking system today works pretty well. A lot of where we think we can add more value is how do we make it more accessible and easier and more inclusive so that more people can participate.
So then who owns the loans?
We have a percentage on our balance sheets, and then we also sell to investors in other banks.
And now we're standing outside of Loving Cup?
Loving Cup for some yogurt.
What do you like about Square? Why is it good for business?
We love all the reports, and also just like all the different products. Like we can pretty much do everything through Square now. I can invoice for catering. I can do customer feedback. I can talk to my customers directly. Another great feature of Square is this tipping screen. It really increases the amount of tips employees
Does it
get.
really?
Oh my gosh, like dramatically. I mean, probably over 50%.
What should I try?
Oh, well, the rice pudding's in here if you want to sample any of it.
I need to get 2 of these.
Yeah, so you started Twitter. That was at what point in your life?
That was in 2006.
Okay, and because you left college, right? And that was it because then you had the idea for that company, or did you have a bunch of different ideas going?
I felt I was learning more outside of school than I was inside of school, so I decided to drop out. My
Like
mom
all
is
the
still
greats.
upset.
It seems to me like the next Jack Dorsey move must be some cool new idea that is going to look obvious in retrospect too.
I think this is enough for me. I'm really excited about our future because both with communication and commerce, there's just so much to solve, and we have such an opportunity to make it easier for people and a lot more engaging.
But do you like being a manager?
I like being on a team. I like being on a team that's creating something unique and creating something that empowers people.
Why is stock-based compensation so important in terms of building the team and keeping the team? Because it's come under some criticism.
It's important because I think fundamentally everyone feels more like an owner of the business, and we want people that are continuing to provide ideas to grow the business in the right way.
So do you care if it hurts the performance, the share price performance in the near term?
We're always going to think long term, and we're building a business that I ultimately want to endure beyond my lifetime.
Do you think it's kind of always the right thing for a company to do, to grow, to go public, and kind of democratize everybody's ability to invest in these companies? In other words, do you have any regrets about the process? You know, how do you feel about it?
I don't have any regrets about the process. For us at Square, you know, our desire was really around, we saw this as a fundraising event. We saw this as a natural path for us.
So the Jack Dorsey, you know, version of the year 2025, you think looks pretty similar to Jack Dorsey vintage 2016?
I have a lot more gray hair and probably wrinkles, I don't know.
You know, the fundamental question for most people being, will he still be CEO of both of these companies? Both of them, he said, especially when pressed on the issue about stock-based comp, that he wanted to be in it for 30 years, Mike.
It's very interesting. I mean, I think you asked them the right question in terms of, are they still in the investment phase, the heavy investment phase with Square? It would seem to me that's the business that kind of is, it kind of should take care of itself a little bit more. It seems like the model's in place. It's just a matter of penetrating against these known competitors, as opposed to doctoring constantly with the product and really building a new team. But that's just my thought on it. I'm not sure. The market doesn't really like the whole situation with the split duties.
Well, that too, yeah.
But such a good interview because you learned a lot of different things. So you learned from a user point of view, they actually like that it's fast. They like the speed. From a business owner, they like the security. They like the data analytics that come behind it. From an investor point of view, I think there's some time because I do think you don't necessarily invest, at least, you know, with 2 feet in, when a company is so aggressively spending. You start to really get interested when that starts to tail off, just like Facebook. Remember when they stop? I mean, they're going to always invest a lot of money, but it's when you kind of get to see the results of that, that's when you get excited as an investor.
I do wonder if the market, to put the market on the couch a little bit in terms of what it's viewing Square as, it's like a Fitbit. Nobody denies this whole area is tremendously growing. How big the pie is kind of your investment thesis, because nobody thinks Square is remotely alone. PayPal does what they do. They put a layer between the credit card processors and the end user. And the question is, you know, do they have a much better mousetrap?
Absolutely. They will continue to hang over the stock. We have some breaking news on a deal in the energy pipeline space to get to. Dominic Chu has the details. Hi, Dominic.
Specifically the natural gas side of things, Kelly, we're looking at shares of TransCanada, also of Columbia Pipeline Group. This is a deal that's been talked about in the markets for quite some time. We now finally have an official deal on the books here. TransCanada inks a deal to buy Columbia Pipeline Group for around $13 billion total. That includes debt. The equity component of that is closer to around $10 billion, or about $25.50 per share in cash. The deal would create a very large pipeline operator in North America, covering a lot of ground here. The TransCanada interest in Columbia Pipeline, specifically about some of these pipelines that they have going all the way from the New York Shale and upper Pennsylvania Shale regions all the way down to the Gulf of Mexico. So again, this deal is now done pending regulatory approval and whatnot, so we're watching those shares. I should note right now, Columbia Pipeline shares up by about 4.5% to $24.60 on 136,000 shares of volume, so still about $1 below the implied price for the takeover. Kelly, back over to you guys.
Yeah, there's still some question. Thank you very much, Dom. A little bit of question about whether it gets approved, but I guess if you can't build it, you buy it.
Exactly. I mean, geographically, it meshes together perfectly. You look at the Canadian exposure and then the Northeast exposure. Seems like it makes a lot of sense, but as you say, you know, it's a matter of whether you can get this done.
There's been a turnover in the administration up in Canada from one that was very pro the TransCanada pipeline to one that doesn't have quite the same rhetoric.
No, definitely not. But I do think it's interesting that companies still looking to do M&A and still looking to build their businesses in this horrible environment to become better when you get out of this turn. So it's pretty encouraging from that point of view.
Yeah, we'll see if it matches ultimately the bid price there. Bank stocks are down 12% the past year. Why is bank CEO pay soaring? We'll talk about that next.
Its sleek design is mold-breaking. Its intelligent drive systems, paradigm-shifting. Its technology-filled cabin, jaw-dropping. Its performance, breathtaking. Its self-parking and self-braking, show-stopping. The all-new GLC. Mercedes-Benz resets the bar for the luxury SUV. Starting at $38,950.
Municipal bonds don't typically get the media coverage that the stock market does. In fact, some people may even find them boring. What they typically do offer is a stream of income that's federally tax-free. Municipal bonds from Hennion & Walsh can give you income that's tax-free, and you have to admit, tax-free income can be very exciting. At Hennion & Walsh, we offer you tax-free municipal bonds from across the country, so you can benefit from tax-free income wherever you live. There's nothing boring about that. If you have at least $10,000 to invest, we want to send you our exclusive bond guide for free. 1-800-376-4376. That's 1-800-376-4376. We're out to prove that tax-free income can be very exciting indeed. For your free bond guide, call now. 1-800-376-4376. 1-800-376-4376.
Every auto insurance policy has a number. But not every insurance company understands the life behind it. Those who have served our nation have earned the very best service in return. USAA. We know what it means to serve. Get an auto insurance quote and see why 92% of our members plan to stay for life.
Get off your and go to work.
This is your wake-up call. Time to do what you've always wanted to do, something better. CNBCMakeIt.com. How-to guides, testimonials, success secrets. A destination for dreamers, doers, and game changers. Fueled by the world's most inspiring self-made entrepreneurs. Stop thinking about what you could be. Make it real. CNBCMakeIt.com.
Welcome back. Bank CEO pay is on the rise again, but bank stocks, not so much. Dominic Chu has more. Dom?
All right, so Kelly, they certainly are a big focus for a lot of Wall Street investors, and a lot of times they want to see investors' CEO pay be kind of commensurate with stock performance. So let's put up some of the three, at least big major players in terms of bank CEOs and how they are doing with regard to their 2015 pay. Against what they did in terms of stock performance that time. So Michael Corbat, we've learned here, has made about $16.5 million in total compensation. Now, it's calculated in a number of different ways, but on a summary basis, if you include cash salaries as well as the equity and components, Corbat made about $16.5 million, 27% higher than what he did the last year. Meanwhile, the stock, not terrible, but still down 4%. Brian Moynihan, Bank of America, about $16 million along those same lines. That's a 23% increase, and about a 6% drop in B of A shares in 2015 overall. And then Jamie Dimon, famously the guy we've talked about as making a call on his own stock back on February 11th, signaling perhaps a bottom for many investors with regard to the market at that time. Those shares, again, up 6% in calendar year 2015. His pay, you can see there, went up a pretty decent amount as well. So if you talk about the overall banks, it is about whether or not it's pay for performance. In this case here, some of the largest money center bank CEOs making quite a pretty penny here, despite perhaps some lagging stock performance, Kelly.
Mike, what do you make of it?
You know, I feel like they're getting paid sort of combat bonuses, right? All these CEOs have kind of been through this war of kind of nursing the banks back to some semblance of health in the face of all the kind of regulatory demands and everything else. So you can't really tether it that tightly to stock performance. Maybe over time you should, but especially with Michael Corbett, it was a matter of you have to pass the stress test at Citigroup, and they did.
By the way, they're now coming out and saying to some of their new hires, Stephanie, millennials, you know, you can have a year off to do service work. You know, we're trying to work with you to keep you interested in working for us and nurture that next generation of talent. But are these guys themselves worth the premium? I mean, are they to some extent interchangeable, or do you really need to be a special person with the comp that comes along with it in order to steer one of these companies?
Oh my goodness, I think if you can run a bank, especially these kinds of banks, and if you can run them well and not get them into too much trouble, that's a pretty big job. Now, I'm not saying that their compensation is justified based on their stock prices. I would also agree, though, with Mike in that a lot of the reasons their stock haven't done so well is because of the macro. Right? I mean, we're talking about Janet Yellen and the yield curve, and that is a huge, huge, huge headwind. So I think over time they should look at the stock price and through cycles, because I think that we're just about to enter a cycle where you see higher rates, and maybe the banks can start to outperform. And in that case, do you actually pay them even more because of the macro? So it's really a tough.
In retrospect, that will make this year look a little bit, less problematic in terms of that return. At least 40 million Americans are filling out, thank you, Dom, their NCAA basketball tournament brackets. Up next, find out just how much money is involved and the odds of your bracket going bust.
The NBC program is sponsored by Payden and Regal, offering global investment solutions.
The power of the NASDAQ market. The power of 100 of the world's top companies. The power of an ETF. The power of QQQ. The thinking we put in, clients get out. Power your client's portfolio at powershares.com/QQQ. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Call 800-983-0903 for prospectus containing this information. Read it carefully. Distributed by Invesco Distributors, Inc.
The Lexus Command Performance Sales Event is on, with extraordinary offers on the exhilarating IS, the thrilling GS, and the powerful RC Coupe. This is the pursuit of perfection.
Sir Ridley Scott, legendary filmmaker.
Are you a film buff, Watson?
No, but I am studying the visual storytelling in your movies.
You know, it's amazing how much information is contained in a single image. One visual can make or break a film.
I am analyzing images for factory managers, salespeople, and healthcare professionals.
That's good, Watson, but not exactly movie material.
Perhaps the healthcare professional could be played by Matt Damon.
You're learning, kid.
Hey, Mac, ready to shave?
I've been using you forever. You're grimy.
Who are you talking to?
Hey, the wife. Let's all shave.
Change that filthy razor.
Don't hang around with the dirty razor, because new ones are so expensive. Shave with a fresh blade, anytime. Try DollarShaveClub.com.
Dish may drop CNBC. Now, when you want to find out what's happening in the markets from the best in business, you might not be able to. Tell Dish to keep the ticker on. Visit MakeDishDeliver.com and demand Dish keep CNBC.
My life gets so hectic. Sometimes when I'm out running errands, I could use a little help. I love this organizer from Saatchi. You just pull it open and you put your bags in it. My groceries no longer roll all over every time I turn a corner. This insulated tote is awesome. I can see why people love it. Under $30, don't miss out on this great Saatchi organizer. Order yours now by going to QVC.com or calling the 800 number. It's easy and it's a great deal.
Are you unhappy with the returns you're getting from your money market funds? My name is Don Ames. I'm the president of Ames Capital Management. I've advised some of the world's largest financial firms in Europe, North America, and the Middle East. My simple and effective strategy has provided strong returns for these clients with limited risk. I'm confident I can do the same for you. So if you're not happy with the returns you're now getting, give us a call.
Ames Capital Management, a better way to achieve your financial goals.
Welcome back. Hard to believe it. March Madness is officially underway. 32 college teams taking the court today for a bid for a national basketball championship. But this isn't just about hoops anymore, of course. It's about brackets and betting. So Eric Chemi is here. Tell us how to navigate it, Eric.
How to navigate it. There's a lot of money being spent on this, billions of dollars. If you look at the stats, it's 40 million Americans that will put in at least one bracket. And that means there will be about 70 million brackets total, which means a lot of people will do more than one. The average bet per bracket's $29, so what's 70 million times $29? That's $2 billion, as you can see on the graph there, just bet through brackets. But there's another 7 billion, which gets you to 9 billion total that's being bet on the tournament. And the Nevada Sportsbook part of it, that's a very small sliver. All these people are betting on games, and this is all data from the American Gaming Association. But here's the question, and we asked some of the broadcasters, some of the management of March Madness, is more than one bracket cheating? So here's some of the sound bites that we got.
Oh, boy.
The first candidate who comes out and says, look, one March Madness bracket, that's the law. He's getting my vote.
To be a real, true sports fan, you only can have one bracket. Just one bracket. Yeah, I think it's cheating when you fill out multiple brackets. You know, we were talking earlier, I'm gonna have a bracket bylaws that I'm going to establish. And one of the rules is gonna be, you can only fill out one bracket. It's cheating.
So it's interesting that the players, the former players and the broadcasters, the ones who actually do the job, they say you can only do one bracket. But if you ask their bosses, the heads of CBS and Turner, they fill out way more than one. They try to be diversified. Listen to this.
Usually 3. There's only so many teams I can follow and so many brackets I can follow. So I'm going to keep it to 3 this year.
I'll probably fill out about 10 brackets.
10 brackets for the head of Turner. So it's like, you know, each channel that they have on, he does 3 brackets for TNT and TBS and TrueTV. It's just so many.
Do you think it's cheating to do more than one?
I mean, those guys are probably richer than their employees, so maybe they take a diversified approach for brackets and business. That's why Turner has so many channels, right? They can put games on every channel. It's probably his same approach to brackets. I don't think it's cheating, but this is the year, if you're ever going to do more than one, this would be the year because there's not a clear favorite. There's no team with really good odds like Kentucky last year being undefeated.
Diversification. Well, I actually think it makes sense that the higher-ups, they really are much more interested in maximizing their chances to win money. Whereas the guys closer to the game, the former players, well, they want to see if their expertise bears out. They actually have a strong view on who's better, how the tournament should go.
I think it's like hedging stocks, though, right? I mean, if you have 10 brackets, you're not really gonna do that well. If you had one and you get it right, you could really hit the mother lode, right?
Financial advice. You should be talking to these people.
Kind of like the lotto tickets. Eric, thank you so much for joining us. Eric Chevy. Up next, we'll get another check on Adobe's earnings for you and get you set up for tomorrow's trading day. Stay tuned.
TradeStation's customer service.
Here's a personal example. I was trying to figure out the best way to do an order for one of my strategies. I called up TradeStation tech support, and they said, let me tell you, we've got specialists who deal in that. I didn't even know they had order specialists. I call up, and he's helping me set up my complex order strategy, so it's like 2 clicks of a mouse. I mean, if you don't think that's powerful, that's powerful.
Traders trade with TradeStation.
Feeling good about Pfizer, Johnson & Johnson, or Amgen? They're all components of XLV, the healthcare sector SPDR ETF, which includes over 50 healthcare and biotech stocks in the S&P 500 to help add diversification and minimize single stock risk. Why invest in a single healthcare stock when you can own the entire healthcare sector of the S&P 500? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully. Visit us on the web at sectorspiders.com.
You're an AT&T small business expert.
Sure am.
My staff could use your help staying in touch with customers.
AT&T can help you stay connected.
Am I seeing double?
No, ma'am. Our AT&T buy one, get one free makes it easier for your staff to send appointment reminders to your customers.
And share promotions on social media?
You know it.
Oh, now I'm seeing dollar signs.
You should probably get your eyes checked.
Good one, babe.